What's going on, guys? Quick update video. This one's going to be pretty brief. There's no really need to go in depth in this video. I'm just going to be covering all my charts updated, the tracking, how everything's looking. Pretty solid day today for AMC, up 10% at one point in the day. High of day 10, 16, something like that. Not too sure, but the rest of the week I'm expecting to be pretty choppy. Range bound 950 to 1050, just chopping up and down, establishing support, and that's it before we move higher. So that being said, let's jump into the video, and we'll start first with January 15th versus the macro. So once again, on the left is January 15th, a 1 minute time frame. On the right is AMC's macro, a weekly time frame. The W here in the yellow box, as you see it here, your January move that you see here, a pullback into an ascending W into your June, pullback, ascending W into your June move. Your flag equivalent would be right here. There's your flag. And then the downtrend, the wedge. So again, you have 4 touches on the top, 3 bottoms, and then a knife into your V. So here's your first touch on the bottom, reject the top as resistance, second touch on the bottom, second touch up top, third touch on the bottom, third touch up top, and then a higher low into your fourth touch, and then knife from there. Over here, same thing. 1, 1, 2, 2, 3, 3, pull back, higher low, fourth touch, and then a knife into your V. So I've mentioned this multiple times now, where AMC is repeating January 15th on every time frame from the 1 second to the 1 month, over and over again. January 15th every single fucking day. Today was January 15th as well, and today was the V. It's every day. It's every fucking day. So here is a 1 minute chart versus a weekly chart of 3 years of price action. So we have 3 years of price action here on the right versus not even a full day of price action on the left. So this is tracking absolutely perfectly. I'm going to be following this. We are missing the weekly candle, this week's weekly candle over here. And I have it updated right here on Webull. I fucking can't stand Webull, but I can't get the 1 minute January 15th chart on TradingView. So I use Webull for it. But here's zoomed in on the wedge. All your touch points are marked. It's absolutely fucking perfect. So your 4 touches on top, your fourth one you reject into your knife. 4 touches on top, fourth one rejecting into the knife, and then you get the V. And from the V, I forgot to mention this, your micro fractal break, when the V concludes, your micro fractal break is a gap up over the entire range, which is what we're looking for on the macro. On the macro, when the V concludes, we're looking for our macro break, which theoretically would be a gap up over the entire range. And since day 1 on YouTube, I've been saying we're going to wake up to all-time highs. We're going to gap up into our squeeze and just wake up to all-time highs. And that's what we're looking for. So again, back to the zoomed in chart. Here it is. And I mentioned in my last video as well, when you do knife from your fourth touch on both sides and you get the V, we're looking for a weekly candle to pretty much come up to $13.80, $14 to conclude the V. Obviously, this could be slightly different. Could take a little bit longer to play out, candle-wise, it already is. But we're looking for a weekly candle up to this range here, $13.80 to $14 to complete the V. And then from there, our macro fractal break, which should take us into our squeeze. We are moments away from seeing that. I can't imagine it taking more than 2 weeks, 2.5 weeks to get back up to the top of this range, $14. I do expect the rest of this week to be pretty boring. So this weekly candle will probably look something like this when the week closes, just chopping up and down in this range, establishing support on top of the previous resistance. But that's that. So looking for $14 on the weekly candle to finish up the V, and then from there looking for a macro break into our squeeze. Now getting into the actual macro perspective itself, I've covered this a million times, not going to go too in depth into it, but you have your first and second peaks here, your January and June equivalents, as you see here, January and June equivalents, your V shape, your macro break in the box right here, the gap down, and then the downtrend in a descending wedge. Green, red, blue, and then the drop to the flat portion. Third bottom of the flat portion is the all-time low landmark, and then from there an uptrend into your squeeze. That's what we're looking for. So on the macro perspective from IPO, you are here, right here at the point at which support and resistance of the wedge meet. Covered this in my last video. The point at which they meet is your third bottom, your all-time low landmark, from which you form an uptrend into your squeeze, a new macro. And the support and resistance on the current macro, the point at which they meet, is the third bottom. So the knife down to 705, which also met this macro trend that dates back from IPO as support, bounced right off of it as support, and now in the middle of the uptrend and looking for a macro break, a squeeze, and a new macro. So the macro perspective looks perfect. The January 15th side-by-side looks incredibly perfect. This looks amazing. Absolutely amazing. And obviously the macro looks great from IPO. Now getting into the actual flat portion, I've covered this a million times as well. Your first and second bottom, gapping up from both, your tri-peak, and then your third bottom, the all-time low. First and second bottom, gapping up from both, your tri-peak, and then your third bottom, the all-time low. And then from the third bottom is uptrend into a squeeze and a new macro, which is where we are now. Last video, I gave two possible scenarios where we could possibly gap up, or we could pull back into this move here, where you get this pop, and then you pull back, chopping here. And this is where we are. It's confirmed as of yesterday and today. Pulling back here, chopping here, establishing support before you get the rest of the move up, and then the gap up that we're looking for our macro break. Date range on this, once again, January cycle from the beginning to the squeeze was 342 days. Current cycle from the beginning to where we are today is 320 days. 22 days away from being one-to-one with the flat portion. This looks absolutely great. And that's that. Now getting into the tracking of the flat portion, zoomed in now. Here it is. So this was one of two perspectives that I showed in my video, my last video, where we could have just possibly hit this landmark here, this top here. So you have your cup here, your first peak here in the green, as you see it here, come back down, chopping down here before you get your second peak, which is a lower high. Same thing, chopping here, your second peak, which is a lower high, third peak in the red, which is higher high, and then the rest of the move up to the top where you reject, and then you come down and you get this choppy price action here, establishing support on the previous resistance before you get the move up that we're looking for. This is January 15th right here, and the gap up into the new macro. So that's what we're looking for. So this was old. This was, I made this in my last video. I showed this. Said there was potential to come down to 850. Landmark wise, 850 made sense. Touch point wise, it made sense. We didn't come all the way down to 850. I believe the low is 896. I believe was this low here. But here it is updated now. So coming down now, and now we got a 10% move today, intraday, to the upside, and then cooled off towards the end of the day, selling off. I'm expecting tomorrow to be red. I'll get into that zoomed in even more, but here it is. So here's all your landmarks that I just talked about in the last slide. Here is the rejection off the top of the range, and then the pullback to establish support on the bottom, and now just chopping up and down here. I'm expecting this chop zone to at least take the rest of this week, if not running into next week as well. It's possible we're chopping down here for some time, establishing support just the same way you see here. This pullback and just chopping down here, establishing support before you get the move up. Here's the actual move up, and now pulling back to the previous resistance, acting as support. We're going to be getting some chop here, establishing support before we get the move up right here, January 15th, right before you get your gap up into your macro break. So that's that. I just covered that. And now zoomed in even more. Here it is. Here's the rejection off the top. Here's your bottom, your absolute low of this section in January, which we have already checked off. The absolute low, 896. You get the bounce up, a couple wicks on this green line here, as you see here, and then you get the pop back up to the middle of the range. That was today, and now selling off. It looks like there's more room for downside here. I would have liked to come down to 950 intraday to at least check these candles off here. Coming down, see these candles are rejecting off this line here, and these bounced on it as support. So here's the candles rejecting that horizontal line, looking to come down to 950 now. But you also do have a candle, and this is an open candle, so take this with a grain of salt, because open candles are generally volatile. So this open candle here, I believe was, yes, January 14th, you actually double topped the move, so the equivalent would be a double top today of 1026. Whatever the high was today, maybe a little bit higher. But then you also double bottom the bottom move as well. So I'm not sure if we get a candle like that tomorrow. Maybe we do it on open. I doubt it. But I am expecting to come down to 950. And potentially, and more than likely, we will double bottom this move here at 896. I believe this wick is slightly higher. So, and it's never going to be perfect. So it could be slightly lower, it could be the same, could be slightly higher. It's never going to be perfect tracking on the micro. Micro tracking is pretty difficult. It's never going to be perfect. And that's it. I think that's it for the video. There's really nothing else to say. Chopping here, more than likely for the rest of the week in this range. Potentially double bottoming 896 this week. That's on the table. And yeah, we should actually see another spike higher than what we saw today. So this would probably take us to 10.6, 10.5, 10.6 range. Maybe 10.7. I would say anywhere from 10.5 to 10.7 this wick. And just chopping in this range up and down all week is what I'm looking for now. It's going to be boring. It's going to be, today was the price action just barely moving, just tick after tick, just 1 penny up, 1 penny down. Very boring price action. That's what I'm looking for the rest of the week. Unfortunately, and potentially, I'll check off the landmarks as we go, but potentially this chop section might run into next week, which is fine. Just chopping here, establishing support before we get this move up, which is January 15th. And then the gap up from there is your macro break. Again, this looks great. This looks absolutely perfect. Could get a couple more weekly candles here before we get the conclusion of the V here at $14. And then from there, macro break into a squeeze. That's what we're looking for. So that's it for the video. No need to drag it out. I figured I would post quick today. If we're chopping around tomorrow, I'm probably not going to make a video. That's it. Maybe I'll make one Friday. Who knows? We'll see how the price action goes. That being said, take care, guys. I'll catch you in the next one.